The biggest mistake retail traders make is confusing price movement with actual trend strength. Just because a stock is rising does not mean the trend is reliable. The true health of a market is measured not by simple price action, but by deep analysis of its underlying structure. We use a proprietary 9-point scorecard to remove all guesswork. This meter scores any trend from 0 to 9, providing an objective measure of strength. We break down trend health into 3 essential pillars: structure, momentum, and exhaustion. 7 points or more means you commit. Less than 7, you avoid the setup. Let's decode the 3 pillars now. Structure is the framework, the bones that hold the entire trend together. Without solid structure, any upward move is fundamentally unstable. We ask 3 simple, yes or no questions about the foundational integrity of the price pattern. Let's start with the classic test. A genuine uptrend must climb like a clean staircase, consistently printing higher highs followed by higher lows. Choppy, overlapping candles and unclear swings indicate confusion, not strength. If your structure is a clean, organized staircase, score 1 point. If it's messy or chaotic, score 0. Every healthy pullback must demonstrate defensive strength. Measure the most recent swing high to low. The halfway point, the 50% retrocementis, the danger line. Strength means pullbacks stay shallow and hold above this line. If price slices through the 50% midpoint, the trend is wounded. Score 1 point for shallow pullbacks. The final structure test. Has the prevailing pattern been violated? In an uptrend, watch for a lower high. The moment price fails to exceed the previous peak, the pattern is technically dead, signaling distribution. If the staircase pattern remains intact with no violation, score your 3rd point. Structure is the roadmap, but momentum is the engine. It provides the raw, internal power driving the price action forward. We need to confirm that institutional money is still fueling the move, not retreating. We use 3 specific checks to measure power. First, observe candle bodies. Are the candles pushing the trend thick and dominant? Shrinking bodies signal weakening conviction. Second, measure the rhythm. Is the trend making consistent progress, or is it slowing to a crawl? Score 1 point each if the size is strong and the rhythm is steady. Volume is the fuel. In a healthy uptrend, volume must increase when price moves up and decrease during pullbacks. Beware of trends where large volume spikes occur on red pullback days. That indicates aggressive seller entry. If volume confirms the trend direction, score 1 point. This final pillar looks for early warning signs that the market is running on fumes. These 3 metrics often flash just before the final reversal, allowing you to exit before the crowd panics. Don't mistake a final burst of energy for lasting strength. Check 7. Have we seen a blow-off top? A single, massive candle on extreme volume often signals panic buying, exhausting all available demand. Check 8. Is there divergence? If price makes a new high, but your RSI or MACD makes a lower high, the internal engine is failing. Score 1 point each if these are absent. Every healthy trend has a predictable character. It feels smooth and easy. As trends die, the personality shifts. Price becomes choppy, hesitant, and starts producing weak doji patterns or overlapping candles. If the trend still feels smooth and strong, score the final point. You now have 9 objective metrics to evaluate any trend on any time frame. Tally your score. Structure, 3 points. Momentum, 3 points. And exhaustion, 3 points. A score of 7 or more validates the trade. A score of 6 or less means the structure is too risky and you must stay out. This system forces you to look past surface-level price action and measure the critical metrics: the bones, the engine, and the warning lights. Successful trading is about quantifiable discipline. By applying this 9-point system, you eliminate emotional guessing and only commit capital to truly decoded strength.